Assalamu alaikum ji. Let's all get seated and get ready for the second session. We have an engaging list of speakers who will be presenting on stage. If I could request everybody to take their seats, and we should shortly be able to start in the next minute. Dr. Ali Salman, Dr. Mahmood Khalid, if you could join us on stage with Rizwan Raoji Sahab. If everybody has taken their seats, we should start now. So after the first session, now we'll be moving towards a session which will mainly focus around the Pied Prime Tax Commission reform proposal, the highlight of this conference. But before we do that, I would like to take advantage of this opportunity to invite the advisor to the KPK Chief Minister Muzammil Aslam Saab, if you could say a few words and share your perspective on tax policy and growth.
Bismillahirrahmanirrahim. Assalamu alaikum. Thank you very much, Prime, for inviting, and it's really impressive. And a lot of intellectuals, they are sitting here, and I'm feeling very honored and privileged to be the part of this Prime conference. Okay, the task is given to me, what is my take on taxation in Pakistan and how it is working, whether it is efficient or what is happening to the tax side of the country. Let me tell you one thing. Our tax to GDP is hovering between 9 to 11%. In good particular year, when we don't have big devaluation, etc., so our tax to GDP crosses 10%. When there is high inflation and our tax target remains same, even if we meet the tax targets, our tax to GDP is below 10%, which is not sufficient at all. Because whatever the tax collected by federal government, 58.5% goes back to provinces. Only 41.5% left with the federal government, and they have to run their entire government, they have to pay back their debts, etc., etc. So there are two questions. A is whether federal government need to reduce the provincial transfers or they have to increase the pie. Usually, when we struggle with the fiscal side, people, including myself in the past, we used to say this, federal government should cut down the provincial share just to ensure fiscal deficit remain under control. But when I joined this provincial government, I came to know that all provincial governments, they are relying on federal receipts between 75 to 95%. So, if there will be a single percentage point drop in provincial transfers, even the bigger province like Punjab will struggle. So that is not the case. We should not go for that. Secondly, the other point, what is provinces doing on their own tax receipts? We made them lazy, we gave them money, they have been spending actually, not investing. They have been spending, mostly politically. Just to tell you about my province, we have approximately 700,000 people employed with the provincial government, which is huge compared to the population size, which is 45 million. In the past few years, especially after 18th Amendment, the government is, more focused on giving jobs and, building their political capital. It's not just KP, it's everywhere, Punjab, etc., etc. So now their expenditure have, gone up, and especially the current expenditure. There is very little money left for the development side. Can we reverse these employments? No, because our structure is very rigid. If once you have employed anyone, you cannot force them to retire or leave, or you cannot fire them. So whatever the way forward is, only the way forward. You cannot go into history. So provinces must focus on their tax mobilization. At the same time, federal government, they have to broaden their tax net, for example. They have to increase the footprint in retail and wholesale sector. They have to increase their footprint in this real estate sector. Provincial government, now the domain of agriculture sector is with provincial government. I am sure majority of the people this year 12,970 billion FBR tax collection target is. And total agriculture tax collection is less than 5 billion rupees by all provinces. So if you compare the size of GDP, size of agriculture in GDP is almost 20%, but 0.2% even in overall tax collection, agriculture taxes is not there. So, provinces have to work very hard. If you want to make this country sustainable, you have to make it sustainable from the provinces side. KP, unfortunately, we are not too big in agriculture, so we can't do much in agriculture side. But still, we have signed the fiscal pact with IMF, and one of the major reform in the fiscal pact is AIT, Agriculture Income Tax. So let's see, Punjab or Sindh will come up to the curve. What we have done, because in the interest of time, I'll wrap up in 2 minutes. What we have done on the tax mobilization side, provinces have to focus more on the non-tax side. Majority of the taxes is with federal government, for example, custom duties, income tax, sales tax, excise duties. What is left with provincial government is A, agriculture tax, B, property tax, which is non-tax revenue, and the other taxes. What are those other taxes and which can contribute significantly? In KP, we have increased the cess rate by 400% on tobacco, for example. Tobacco is the key crop in KP. We have introduced the infrastructure development cess on Afghan trade transit, export and import, which is traveling back and forth from KP to the borders. We have, in fact, reduced the property tax. And I just came out from the IMF meeting. I told them, since you have increased the rate of property, the tax collection have reduced by 70%, at least in my province case. Because now the net transaction cost of real estate for the 9th filer is 23%, including all federal and provincial taxes. So now people, they are just doing the bilateral agreement and they are not going for the registry and the mutation. So as a result of it, my revenues have reduced by 70% because of this. So I told them there are two sides of the taxpayers. One is non-filer and the other one is filer. In non-filer, there are another two type of people. One is, rich people, another one is poor people. KP is, population, more than 50% of the population of KP is poor. And their ticket sizes, they are, they're just cook, driver, guard, security guard. So they will remain non-filer for life. And their ticket size, if they buy property, between $5,000 to $10,000. And if you're charging 22, 23% on transfer, they cannot afford it. So then they will go for the bilateral agreement. So what you need to do is, you have to segregate it with the ticket size. Anything below $10,000 or $15,000, they should not be paying, 12.5% withholding tax on the transaction. Yes, I don't mind, increase it to 20% for the rich people who are doing, $1,000, $100,000 property transaction, etc., etc. I have been keep on saying this to IMF, to the federal government, but for the optics sake, they are doing it, and actually it is discouraging the documentation. So we have done a lot of reforms. We have introduced 50 tax reform in the last money bill. And as a result of it, our tax revenue receipts increased by 31%. Just to conclude, KP have produced 103 billion rupees fiscal surplus for the first quarter. Our target was 45 billion rupees. We are on the sweetest spot of the, at least in the last 15 years, or I can claim that in the last 77 years in terms of cash balances. So we are much more prudent. We are adopting, we have been adopting 3 policies: revenue maximization, expenditure rationalization, and maximum resource mobilization. And so far it has been working. Thank you very much.
Oh, I have this nice
No, make it short. Rizwan Raoji is here.
Rizwan Raoji is here.
Okay, that's good. Go.
One of our most generous supporters. He's always there with his resources and his time. I would really like to thank Rizwan Raoji for coming all the way from Belgium to join us on stage. One of Prime's greatest supporters, Rizwan
And
Raoji.
Mr. Rizwan is a time kebab paband. Time is money, and we have to realize that we need to have that same mentality here in Pakistan. Alex, that was great. I mean, Georgia is an example of how a country should be run economically. But unfortunately, we in Pakistan are still in the waiting game. Okay, my title today is, will this be the last of Pakistan's IMF program? Day before yesterday, I picked up the newspaper, which is a very well-known paper here, the International News. And the top story in the news by Mehtab Haider, he's a well-known writer on economic matters, and I read him regularly. The top story was, higher tax rates resulted in less tax revenues, IMF told. The Laffer curve is basically the thought behind the relation of tax rates and tax revenues. And I am presenting you the Laffer curve. Now, the Laffer curve was basically the idea not actually founded by Dr. Laffer, but it was founded by a Muslim scholar in the 14th century. And that scholar was Ibn Khaldun. And in the Muqaddamah, there's a section on economics, and he says, in the beginning of the dynasty, you have low tax rates and high revenues. But at the end of the dynasty, you have high tax rates and very low revenues. That's the idea behind the Laffer curve. It's a trade-off between tax rate and tax revenues. What you see here is on the gray side, it's the prohibitive range in terms of tax rates. That means when you start from zero, and at zero you have zero revenues. Obviously at zero you're not going to have any revenues. At 100% you also will have zero revenues, because at 100% nobody will be working and there will be no tax collection. So when you start moving up on your tax rate, let's start from 1%, 2%, 3% onwards. So basically what the Laffer curve says, that for every dollar or every million or any billion that you want to get, you have a rate of 1% if it equals 1 million, and when you go from 1% to 2%, and the expectation is 2 million, which probably would be 2 million, and then when you move up the Laffer curve, 5, 10, 15, then you'll get the same 5, 10, 15 million. But there's a point where there's a conflict between the tax rates that are in the prohibitive range and the range where normally you start with. So the first effect of moving up the tax curve, the Laffer curve, is the theoretical rate that economists use to think that they're going to be increasing on the tax revenues. But when you come to the point beyond and starting moving up the prohibitive range, so basically for every percentage of rate that you increase, doesn't necessarily give you that 1 million or 1 billion in revenues. So the further you go up the Laffer curve, you will soon find that your dollar per dollar in terms of percentage versus the dollar, the rate of your revenues start diminishing. So what we need to be is always at the rate where it's below the prohibitive rate. Now you have to realize that the part where they collide doesn't mean that you're at 50%. It doesn't mean you're 50%. That could be any range from 40 to 50. And currently we in Pakistan are way up there. I mean, probably somewhere between where the Laffer curve conflicts up, probably somewhere midway there. So there's no wonder that today, with more tax increases day by day, we're finding ourselves getting less revenues. The IMF loans are tied to structural adjustment programs based on excessive austerity benchmarks. This is IMF. Whether it's IMF here or it's IMF in another country in Africa, wherever, this is basically their idea that you have to reach benchmarks. So basically what they're looking for is tax revenue targets, which means basically tax increases. Then they look for the fiscal consolidation, which is basically primary budget surpluses. Then they look into debt sustainability, which means gross financing needs. And the last thing they require is foreign exchange reserves, which in IMF jargon is called buffers. Pakistan has accepted 40 conditions in return for $7 billion from the IMF this year. Like all IMF programs, these benchmarks and conditions have proven to be unrealistic and unattainable, which further leads to harsh measures read tax increases through mini budgets, and then the vicious cycle continues. Another standard IMF statement for all the countries that are on IMF programs is sound policies and reforms for a stronger, more inclusive and resilient growth. This is typical IMF, whether you're meeting them in Washington or you're meeting them in any capital city. This is their statement. It's not sound, in my opinion, and it's anti-growth. Currently, there are two camps of macroeconomics in Pakistan. The first camp are the stabilizers that basically believe in stabilizing the economy. Then there are the growthists that believe in growth of the economy. The stabilizers, they prefer demand management. The supply-siders prefer supply-side economics. On the other hand, the stabilizers want gradualism, we want acceleration. They want slow growth, we want high growth. They want higher taxes, we want lower taxes. They want big government, which recently the term is coming here in Pakistan called right-sizing. I don't know what right-sizing means. I mean, I can gain 20 pounds, maybe it's the right size for me. The word should be downsizing. What we need to do is take a chainsaw and downsize. The first camp, they fear boom and bust cycles. I mean, this is something I hear all the time in Pakistan. Oh, we have this boom and bust cycles. We don't fear boom and bust cycles. The reason is the stabilizers' definition of growth is based on consumption and government spending. And believe me, Pakistan is a master when it comes to government spending. We don't fear because we believe that the growth should be on the area of investments and net exports, which means export minus imports. Now the solution for this, for the supply-siders, is a set of 6 definitions of economic policies. The first is rationalization of the tax system, A to Z, spending restraint by the government, free trade, sound money, deregulation, privatization, and for Pakistan, I put the last one at debt restructuring. The rationalization of tax system and free trade is probably the easiest thing to do out of these reforms. Now, sustainable economic growth can only come, as Mr. Alex has mentioned in his speech, is lower tax rates on a broad tax base. No exemptions, no deductions, no exclusions. There should be few taxes, and Georgia is an example of a country where they chose to just keep 6 few taxes. and income should be taxed only once. And the best way to do it, in my opinion, is to have a flat tax regime. The flat tax is the fair tax, and it's a simple tax, and it's a predictable tax. So I've always suggested in several of my speeches at Prime that I believe that the best rate for corporates in Pakistan should be 20%, and it should be flat. On income, it should be 10% and flat. And on sales, it should be 5% and flat. So people and businesses have the least incentive to evade, avoid, or not report taxable income. You guys following me? Capish? Okay. The next area is government spending. Government spending, as the late Milton Friedman, the famous monetary economist, said, is nothing but taxation. Government spending is taxation. And in Pakistan, we see that we have a government spending which is excessive and wasteful, which always leads to regular budget deficits and higher government borrowing, which also leads to higher debt service payments. And in Pakistan, we are in a situation where we are actually paying more to service external debts than receiving in new external finance, which I call net negative transfers. Did you guys get that? I'm saying it again. This is very much for Pakistan. Paying more to service external debts than receiving in new external finance. So there is no fiscal space for any development of any sort for Pakistan at the moment. So, ladies and gentlemen, in a nutshell, Pakistan is bankrupt. The other third area is free trade. Now, free trade benefits all: importers, exporters, consumers, producers, and promotes economic growth. Low tariffs lead to gains from trade by increasing total trade. That means it increases exports and imports. That's what low tariff does, is increase your total trade for the economy. Protected tariffs, it's a no-brainer. It invites evasion and crime. And then we have this myth of trade deficit. Trade deficit is not a major issue, because actually a trade deficit also happens to be capital surplus. If you had seen Alex's thing he had on the thing, you saw that Georgia's exports were something like about half or 1/3 of the total imports. That's not a situation to worry about, because at the end of the day, a good portion of that imports was probably the capital imports that the country did in terms of foreign investment, etc., etc. I mean, it's common sense. The other area is sound money, and monetary and fiscal policies are very closely aligned. So one should have a monetary policy which slows money growth, which basically means the quantity of money. That's M3 in monetary policy. We should have low interest rates, and interest rates is nothing but the price of money. It's just the price of money. And we should have it in single digits. Stable currency, it's absolutely necessary. Devaluations, it's a fool's errand. When you devaluate, you're basically offsetting inflation. As simple as that. No change in trade balance due to no change in real output. The other area is government regulation. Now, PIDE had recently done a study, and they said that in Pakistan, the government footprint is 67% of the economy. That's absurd. Too many unnecessary regulation, and I call it's called slow strangulation. Regulation in Pakistan is slow strangulation. Raising the cost of doing business, resulting in excessive collateral damage to the economy. And regulations should be reviewed on a regular basis, and it should be evaluated, and it should be justified on a continuous basis to ensure a level playing field for all businesses, period. Privatization. SOEs are a huge net drain on fiscal solvency. And we have plenty of federally owned SOEs in Pakistan. And you said yesterday there were about maybe 200 or whatever it is. These state-owned companies should be all for sale. And they should not be restructured, and they should not be transferred to the provinces. Muzammil, you heard that one? Don't accept any state-owned companies in KP, all right? Let them just get rid of it. No haggling on price, please, no haggling. And recently we had this fiasco of PIA. This privatization process of PIA is basically a case study how not to privatize. Auction to the highest and able bidder should be done in a transparent manner to get rid of these ridiculous IOEs that are sitting on our heads. Lastly, debt restructuring. This is very, very important for Pakistan. It should be a debt restructuring on the international and the domestic debt that it's hanging above on our necks. And in close collaboration with our lenders, and this is to be done ahead of time so we can avoid a sudden default due to the consequences of delaying the debt restructuring. And also at the same time, you should be aware that if it's a sudden default, it could be a run on the banking system, which will be disastrous for Pakistan. Our debt obligations for the next 12 months is something like about 30 billion US dollars and about 130 billion over the next 5 years. This keeps Pakistan on a nice edge. Every fiscal year, we're on a knife's edge. And that keeps us begging for loans and rollovers from our so-called brothers. The IMF acknowledges risks of its loan program going off track, and there's no wonder that they are in Islamabad this week. Past experiences have shown overall risks in policy implementation, missing targets, high elevated debt, low reserves, gross financing needs, and lastly and very importantly, challenging socio-political factors. This modus vivendi between the IMF diktats and Pakistani kakistocracy. I don't think any of you have ever heard this word before. I doubt it. But I will give you the Oxford Dictionary of this noun. A kakistocracy is a government by the least suitable or competent citizens of a state. Given that we have kakistocracy and we have IMF diktats, we will not solve our nation's ills. Everyone knows how we have put ourselves in this quagmire, but how to get ourselves out of this catch-22 dilemma is of immediate imperative. We need to take ownership of these challenges with our own homegrown solutions, and not the homegrown solutions currently professed by our finance minister. Our government, bureaucrats and politicians have become the problem and not the solution. Pakistan is suffocating. Given that 40% of Pakistanis are living below the poverty line, 60% of the population below the age of 30, and jobs in short supply, we don't have the luxury of a slow growth approach. What we need is a shock treatment, a drastic change in economic policy, and most importantly, a firm commitment on implementation by all stakeholders. I'm sorry, I'm sort of missing one of these cards here. So in the end of the day, what we need if we continue to do the same thing over and over again and expect a different outcome, which is basically Einstein's definition of insanity, we will never get out of this vicious cycle, which I call a Groundhog Day syndrome. And surely this will not be our last IMF program. Pakistan Zindabad, Generation Z Zindabad.
Thank you, Raji. That was a great speech. Now, in 2015, Dr. Ikramul Haq wrote the seminal work towards flat, low-rate, broad and predictable taxes. The third edition of the book is now available, and you can get it from the registration desk if you want to read it. His work is largely inspired by the efforts of Dr. Atul Afif, who joined us on the second Prosperity Forum almost 2 years ago. Now today, the Pied Prime Tax Commission, which has developed this proposal was developed under the leadership of Dr. Nadeem-ul-Haq, who was at that time the Vice Chancellor of the Pakistan Institute of Development Economics. Under his leadership, Prime and Pied jointly developed this proposal, which was meant to be a realistic, incremental, and fair attempt across the board. One of the greatest minds and a national treasure, no doubt, Dr. Nadeem-ul-Haq was scheduled to deliver an address here, but had to leave to join another gathering. He did leave a few points before me, which I will just shortly read out. He emphasized that there is no way forward without collaborations, and he reiterated that unless all of this research, and there is a great depth of research that has been conducted by Prime, that has been conducted by Pied, unless all of this is connected through citations, through partnerships, and through engagement, it will not have the impact that we need it to make. We have been repeating our messages for many, many years. However, when it comes to reform, the government generally will choose to adopt the firefighting approach. Well, with that said, let's get to more specifics of the tax reform plan and the details. Now, firstly, I would like to invite Dr. Ali Salman. Dr. Ali Salman is best known as one of the most prominent contemporary macroeconomic analysts and economic consultants. He is the Executive Director of Prime and the Executive Director of the Islam and Liberty Network as well. He has previously had the honor of leading ideas in Malaysia. He is an alumni of the Atlas Network, the International Academy of Leadership, a Fulbright Scholar, and a Royal Netherlands Fellow, and an alumni of the beloved Quaid-e-Azam University. Dr. Ali Salman, if you could, please take the stage.
Thank you so much, Syed, and thank you so much. Thank you to all of you for joining 4th Prosperity Forum, and thanks again to all our supporters and partners. So, I think already we have heard a lot about the importance of tax reform. And Syed has provided you a background of how this Pied Prime Tax Reforms Commission was constituted. Prime requested then Vice Chancellor Dr. Nadeem-ul-Haq to collaborate, and he immediately agreed to the proposal and set up this team, which comprises, amongst himself, other than himself, Mr. Shahid Kardar, who has been here. I think he had to leave to Lahore because of the smog situation. He had to reach earlier. Syed Shabar Zaidi, former chairman, FBR, Dr. Ikramul-Haq, Dr. Manzoor Ahmed, I think who is here, Dr. Nasir Iqbal from Pied, Mahmood Khalid is sitting here, Dr. Khalil Ahmed is also here, and distinguished fellow at Prime. So this was the commission which was set up by these two institutions, and we had about 12 meetings, mostly online, over the course of last few months, and discussed quite a bit of detail in like what should be the outline of tax reform proposal. We looked at essentially 4 major taxes: the income tax, the sales tax, the customs tariffs, FED, and then we thought that we should not only give proposals, but we also should do an empirical analysis, like implications of these proposals if implemented for growth and revenue implications. And I think this is what makes this report stand out from, may I humbly suggest, all other reports which have been previously published. First of all, those reports were published under directly the guidance of the government, which makes those reports, I would say, not very independent. And this is coming out of 2 independent institutes and teams, although Pied, of course, is a government think tank. But they still had their independent thought and policy process. And secondly, this combination of not just economic theory, but also policy practice, which was part of this commission, and also the best legal background or the legal knowledge on the taxation law was available. So I think the combination of economic theory, the legal background, and also the empirical research was provided to the commission. And I again thank and acknowledge Dr. Mahmood Khalid and Dr. Nasir Iqbal for leading this side from PIDE. I will just present you the outline of these proposals. I will not go into details just to manage the time. You have everything here. And this resonates pretty much what we have been hearing this morning, particularly what Alex outlined in the case of Georgia. And we have also taken, by the way, we have taken an account of all, like the current tax reform proposal which are available in Pakistan. We have taken and studied all of them. And so we try to create a consensus here. And I've already proposed to Pakistan Business Council, the CEO of Business Council was here this morning, that in their upcoming economic dialogue, they should endorse this proposal. And I believe that if the thought leadership and business leadership of the country can combine, then political leadership has to listen. Right? So we cannot just go on just with the transaction-based approaches, which has been the case, as Mr. Raoji also highlighted. And this is how the report is structured. Essentially, we are not saying that the key purpose of any tax reforms is just tax revenue collection enhancement. This may be the result of it, but not the end objective. So this is the vision, that we want a citizen-friendly, transparent, stable and predictable tax regime in the country, aided by simplification, harmonization and automation. Again, what is happening right now in Pakistan, there's a lot of talk about tax reforms. And shortly we'll be joined by Minister of Revenue, Mr. Ali Pervez Malik. Due to the IMF delegation, of course, he could not join earlier. And the focus of the discussion in these, the reforms is really administrative side, whereas we are talking about policy, which is missing. There is no tax policy in Pakistan, believe me. There is only tax measure and tax targets. So we have a tax target, and then we have tax measures to achieve those targets. There is no policy. And PIDE Prime Reforms Commission has proposed a tax policy, which, in our opinion, is workable. And as a result, we have also heard a case study this morning from the business sector, from one sector, construction sector, how it affects negatively growth and investment. And it leads to all kind of malpractices, tax evasion. I think we had an excellent story this morning. As human behavior, we are forced to do this, right? I think, repeating Alex's words, essentially human nature is not criminal in nature, but due to the kind of the complicated legal structure, they are forced to evade the structure. And particularly when we created this filer, non-filer distinction, it creates all sorts of problems, and then we have the revenue shortfalls. And also, a lot of these discussions in which local academia, local private sector are not part of the deliberation. They are maybe led by international donors, and that's also part of the problem. So, first of all, we looked at the custom tariff reforms, and the bottom line of the customs tariff system in Pakistan has been an import substitution, number one, and number two, the revenue maximization. These are the two major sort of objectives of the import of the custom tariff regime. Dr. Manzoor led that component in the Tax Reforms Commission, and of course he is the best expert here. I'm not going to say a lot on that subject. So basically what we presented, that we have to come out from this thinking of dependency on the custom tariff and import taxation, broadly defined as tax revenue measure. Remember what Alex presented this morning. Georgia, 140%, right? So that was very huge, 140%. Ours is about 60% dependence on export taxation. Still not that bad. I mean, I cannot imagine 140%, but here you are. And it is brought down to less than 5% now in case of Georgia, and it happens all over different countries. So that is wrong, and we want to change it. And so first of all, the first step which we have proposed in this is that we have to abolish the additional custom duties, regulatory duties, and advanced taxes which we collect at the level of imports. And then we have to come up with a simplified customs tariff. This is still not flat, by the way, because we want to create a consensus. So we recognize that although ideally we should go towards that direction, but maybe we can take first step by making the slab structure more simplified and more transparent. And also bringing custom duty at par with regional economies. Remember, we heard the case study. It is now 1.5% in case of Georgia. Okay, ours is 10%. It has been reduced. We recognize that, but because of other additional duties and taxation, you know, the heavy custom duties is still there. Very importantly, we are saying same custom duties or tariff irrespective of the end user. We have a very complicated tariff structure in which we impose different duties depending on a different use and different purpose, like commercial importer, industrial importer, and then are we importing a product for end use or for re-export, for production, all have different rates. And we are suggesting it should be one single rate. Then again, general sales tax, effectively we don't have a, you know, across the economy, if you look at the current outreach, about 4 million commercial and industrial enterprises, we know them. They are recognized, they are part of the economy, and there's hardly 100,000 companies or enterprises are with them, are with the system. And then we have this lack of harmony between provincial government and the federal government. Have been hearing about harmonization for a long time. It has not happened. So it needs to happen. That the businesses should be paying same rate of the VAT or GST across the federal and the provincial domains. And then a lot of exemptions. We are suggesting no more exemptions, and we can follow the EU standards there. So the reforms is harmonize and equalized VAT mode across goods and services and across provinces, number 2. And this is very important. Right now, the rate is about 18%, and we are saying that gradually it should be brought down to 10%. It has to be brought down to 10%, and we'll hear from Mahmood how this reduction has helped in formalizing the economy and in increasing the revenue in the GST mode. And then we can follow we should follow EU standards and zero rated of GST VAT on the domestic supply of items. We are also saying that to encourage industrial production, the import of plant and machinery, industrial raw materials and intermediate goods to be zero rated. And then there's specific suggestions here that by the end of years 5, GST on chapters 24 to 97 of custom tariff should be gradually zero rated on imports. And then income tax, extremely important. We have set our income tax to actually as an incentive to not to corporatize. We don't have just a corporate tax, but we have all kind of like super tax imposed on the companies. Earning higher profit is actually penalized, and we are saying we should withdraw all kind of additional, government should withdraw all kind of additional taxes like super tax on the income, including the individuals. The effective tax rate on large companies have gone beyond 50% of their income. So you cannot do any business in such an environment. And then our income tax regime is also quite complex because it has actually gone into a withholding regime. The majority of taxation now collects under withholding regime and presumptive mode, which needs to be changed. So again, same level, same rate of taxation on same level of income, irrespective of sources. Currently, this is not the case. We have different income tax rates applicable on different sources of income, which creates evasion, which creates complication, and give rise to corruption. The Commission is still in favor of income tax slab rationalization for progressivity, and also change in the income tax exemption threshold. And according to the Commission, the effective tax rates on personal income tax should be 5% higher than the corporate income tax rate. And this is a very important, all these taxes have been imposed last few years. We are saying that these taxes, additional like rental income tax, capital value tax and foreign assets, the foreigners, the overseas Pakistanis have to pay taxes on the properties which they own outside Pakistan, which is wrong. Super tax, turnover tax, intercorporate dividend, all should be abolished. Again, similar regime for the corporate income tax has been proposed here. The rate we are proposing is 25% to make it regionally competitive, and withdrawal of the additional taxes which are currently imposed on the corporate income. Federal excise duty, very important subject, and a lot of discussion is happening. The Commission is in favor of high excise rate on set of products like tobacco and additive beverages. But I personally recognize that this has already entered into a prohibitive range of the Laffer curve, as also acknowledged recently by Chairman FBR, that government has increased the rates of FAT on these products, and it has led to more informalization, more informal economy, which is again causing the problem. So we need to look at it more deeply. We are also have proposed that withholding taxation regime should be changed to an advanced income tax regime, so this should not be a final tax, but it should be calculated towards the final tax liability. Ultimately, there are about, I think, 80 or so withholding taxes, and we are saying we need to abolish all of these except these four, which is the payroll, interest, dividends to non-residents. Except these items, all withholding taxes, particularly on transactions, should be withdrawn. And there are also revenue non-spinners, which we should be withdrawing. We have also proposed specific changes in the capital gains tax reform, which is not helping the capital formation in the country. And so the capital gain should be further aligned with the capital formation, which is very important for investment and the growth in the private sector. Federal income, the agriculture income tax, we are saying that make it a part of the federal income tax code, and the exemption should be withdrawn. And then should be other incentives for corporate farming. I think that is all from my side as far as the proposals are concerned. We'll continue straight from here to Dr. Mahmood Khalid, who will talk about the revenue implications and economic growth implications. Please.
Bismillah ar-Rahman ar-Rahim. Thank you very much, Ali, for setting up the stage. In fact, we all have gathered here for the same purpose, that we really want our tax policy to improve. And we have heard the former presenter from Georgia that how actually it has helped the Georgian economy. So we also believe that in case of Pakistan, taxation is one policy handle which can actually bring change all across the board. Unfortunately, the government already knows this but uses it on the other side. For example, if you look at any sorts of government incentive or any promotion, it would always have the taxation in it as the policy handle. So tax policy is not left to do its job, which is basically the tax collection. So what Ali has described to you is that we sat together in order to discuss the tax-related reforms, not just for enhancing the revenue, but to bring in the desired change as a behavioral impact which the tax can have. So ours was basically to think about how we can have a revenue buoyant change, but also to preserve the economic growth. Because unfortunately, in all of the macro policies or the recent IMF programs, what we have been missing is the growth element. So we really wanted this to be there. And as Rauji has rightly explained, that we need to allow the businesses to breathe and do their job, because in turn it's also going to bring in the revenue. He has talked about the Laffer curve. Normally we take it from another perspective which we call as the transaction cost. Taxation primarily has become such a big cost for the businesses that it stops the businesses from doing its business. So it's not just the revenue anymore, it's also the other side where actually the businesses are not happening. So we really have to think through that what kind of tax collection policies we are adopting. So we have formulated a set of recommendations which are not journalistic, it is very specific, and our task was basically to give that confidence to the policymaker as well, that whatever policies they want to make, they're not going to lose their revenue. Ultimately, they're going to have more of it and on a sustainable manner. So this was basically the objective. So we wanted to present the numerics as well, so that there is some confidence. But there are risks. We are not saying that this is actually going to happen, because we never expect, we don't know that how the businesses are going to respond, but we are very hopeful, because there is always optimist approach whenever we talk with the businesses, as we have the president of the Contractors Association here. They are all looking for doing business, and this is not something which we would think that the businesses are basically not willing to comply with paying taxes, or they're not that much competent. It's only the environment which needs to be provided. So I'll not go into the reforms which Ali has elaborated. I'll directly go to what our estimations basically propose. And these are numbers. Remember, it is not something which does not have risk, which does not have caveats. We can always improve that, and unfortunately one of the problems we had, that we didn't have the FBR as a partner to this commission. Had the FBR been sitting with us, we might have produced more robust estimates. But these are indicative enough that whatever changes we have proposed are going to work in terms of more revenue. That's it. So going back, again we started off from the customs and tariffs, because of two reasons. One was, of course, that this is something which is always under consideration in the most recent debates, that we are a country having twin deficits, where we always blame that the tax side or the fiscal side is actually also a result of the trade side deficit. So we wanted to target this first, and to bring out certain proposals which would give confidence not just to the tax collection side, but also on the other side, that this is actually going to spin the trade on our side, so that we can have the additional foreign exchange reserves as well. Because as the transactions happen, ultimately we are going to have that necessary growth and benefit. And when we say that, this is not something which we are saying it out of our normative sense of theory, or something which we cannot say with confidence, because Pakistan itself has witnessed that regime in the 2000s, and the data is in front of you. When the reforms started to take place, as was happening all around the world, there was increase in the overall size of the trade. Remember, when we talk about the import side or the trade side taxes, it's not just about the import duties, it's about the overall size of the trade, which is also important. And as Ali has rightly mentioned, and it is good that the Pakistan's economy is integrated with the rest of the world, as every country has, where it is dependent on certain inputs from the rest of the world, because it's cheaper, so that we can produce and we can sell to the rest of the world, as well as use for our domestic purpose. So the history of reforms tells us that actually the trade has expanded in the 2000s when the import tariff related reforms were taking place. So it was beneficial both from the perspective of higher revenue because the trade was increasing, as well as the benefit of the society and the economy by and large. And when we say this, this is again also verifiable if you look at the revenue side. So one might say that we are losing resources because the import tariffs have gone down, but one also has to understand that since the economic activity is happening more, the overall revenue balances are going to increase. We have not included, as we move forward, the revenue estimates from the internal revenues, because once more trade happens, actually the growth in internal revenues also happen, but we just focused on the custom side so that to bring some confidence in terms of the policy making that why this is something which is beneficial. And to do that, often we also take examples from the rest of the world because we are not different in terms of our endowments, in terms of our productive structures than others. So the case in front of us was basically of the Vietnam, in which they did the similar reforms as we were doing, but they didn't come back or they didn't stop, and that has actually led to substantial increase in the revenue. So that is something which should have been the case in Pakistan as well had we not taken back our stance in terms of reducing the tariffs or at least sustaining that level which we had achieved. So both of these, this study as well as the historical trends actually gave us the confidence, and we estimated that it is going to bring us the desired resources in terms of additional taxes from the international trade sector. And to do that, as earlier was also presented by Alexei, that we need to think about having policy which is universalized. We cannot have differentiated treatments for different segments of the economic sectors, because all of these sectors are integrated, and if there is a distortion for a particular sector, that is going to go around in a systematic manner. And that is also one of the cases which is reflected not by our estimate, this is FBR's own estimate, that the policy gap or the tax expenditures have risen significantly. So what happens is that when you increase the rates, that means that on the other side, there is going to be increased exemptions also, because the same rate applies in terms of the exemptions. Plus, there are new entrants in the system in terms of lobbyists, around 7 of them, which takes away the costs rather than paying them. So what second option which we thought about was in terms of targeting to recover for any loss if there is because of the initial periods of the trade-related revenue was the policy gap, and we talked about it, that how we can reduce it. And then there was another set of reforms which are related to this, because when we talk about the international trade sector, there is another issue what we refer to as the misinvoicing or the smuggling. So our belief and the reports or the research actually leads us to that if the rates go down, then the incentives to misinvoice reduces. As the rates increases, the complexities in the system increases, or the incentives to misinvoice increases. So the reduction in the tariffs not just increases the overall trade volume, but it also helps to reduce the smuggling and the misinvoicing. So we use these insights, and we estimated that if we start reducing the tariffs as per the policy slabs which was identified just for, it would initially have a loss in the trade-based revenue. But if we simultaneously hit upon the policy gaps or the tax expenditures as well as the compliance gap, which is basically the result again because of high taxes, then we would achieve surplus or additional resources, and it would not fall. And in order to make our point more realistic, instead of focusing on the numbers, we talked about the percentages, since the data which was available to us in a verified form was of 21-22. So finally, if we go ahead with these reforms, our estimate suggested that in year 3, we would have an additional resources of around 36.5%. And if you cumulatively see, this is going to be close to 300 billion rupees of additional resources, so nothing to lose. On the second side, when we talked about the GST reforms, as Ali has alluded in terms of what were the gaps, we had a broken VAT, everybody knows this, but this should not stop us from moving ahead in terms of applying VAT, because having a weakness or a gap should not refrain from adopting a perfect policy. We have also talked about the administrative reforms, in which we have talked about that how the digitization actually can take place, whereas the current system, if it has weaknesses, can be overcome. So when we talk about the reforms, again, Pakistan's case was unique, that we had plenty of trials in terms of adopting a reformed GST, having a differentiated GST regime, and trying to impose GSTs on those sectors which theoretically are not part of the overall tax base. But what the world has done is that they've moved to the VAT earlier at a lower rate, because as earlier mentioned, that if you keep the rates low and you broaden the base, that's going to be more buoyant in terms of the taxation revenue. So what we have suggested is that in the short run, if you take out the additional tax rate and you cut it back, but if you switch to VAT mode, actually it is going to help you raise more revenues in the long run. But for that, what we have to do, that we have to improve the overall regime, and that is basically taken from a paper which has recently been published and authored by Dr. Ihtisham Ahmed, where they have talked about, again, starting from the exemptions. These exemptions or the tax expenditures are basically the distortion in the system, which actually does not help us in terms of adopting a universalized policy. Then there is the need of full digitization of the businesses, both internally and externally. And LSK has also mentioned, he has talked about the refund system. That means that every transaction is going to be digitalized. We cannot have exemptions. We cannot simply exclude people from not giving us the right information. But the system has to be digitalized so that the transactions on the part of interaction with the FBR actually eases up. So I'll skip that and I'll directly move to what we have estimated, that what is going to be the outcome if these reforms are taken ahead. And again, remember, we have picked to reform the exemption side by taking out certain resources from the policy gap or the tax expenditures as well, along with improvement in the compliance side. So what we have estimated, again, by the year 3, we are expecting that the revenue of the base of 21-22 would increase by 33%. And again, since the GST is the most buoyant resource in our tax collection at the FPR level, so we are expecting that we could additionally generate close to 2.5 trillion rupees worth of additional resources in just 3 years of reform. Finally, on the income tax side, again, if you look at the tax code, it's complex, it has preferential treatments, it has exemptions to the tune which is close to 500 billion rupees without any evaluation that what are they intended for, and they're increasing at an alarming pace. So what we have proposed, not just on the exemption side, we have also worked out the ideal kind of income tax slabs as well, using the labor force survey, and we have estimated that instead of lowering down the initial threshold, even if you increase it up to the tune of 800,000, but with the right kind of rates for the right kinds of the slabs, we would end up at a higher resource collection as compared to what we are doing right now. On the sides of differentiated treatments, we have again considered that instead of having different rates for different sets of income, they should be treated at par, and having average effective rate across the board would actually help us recover more resources. Ali has talked about the return-based revenues coming down. We have estimated that if we move ahead by abolishing the filer-non-filer distinction, this is something which is creating more problem rather than benefit, improving the ease of filing and reducing the withholding taxes. As he has mentioned, that 44 types of withholding taxes are actually on transactions. They are not actually on the presumptive incomes, and that is actually an indirect cost, which is not just affecting the transactions of the businesses, but also working like an indirect tax. So if we move ahead with that, we again would end up in terms of having additional resources. And again, as earlier also mentioned on the real estate sector, that the taxes should not be presumptive, they should not be on a minimum basis, they should be on an advanced basis. And the system should be such, our FBR audit system should be improved enough that if there are any compliance gaps, that can be improved. But unfortunately, if you look at the FBR, the audit-based collections are actually falling down. So any notice which is served to the tune of 1 million would end up at a collection of maybe less than 0.1 million or something like that. So that is the problem of FBR. It should not be resulting in terms of penalizing the businesses on the other side. Ali has talked about the FED. He has talked about that maybe we have touched upon that leftward point in which there is no additional resources, but again, FED is not for resource collection. This is the problem with FED, that we always think about this tax as for collection of resources, whereas this is actually to prevent that consumption. It's not for additional resources. We have a GST for that. That's the indirect tax which we should be collecting. So from that perspective, we have actually recommended that we should not only improve the regime on the cigarettes, rather we should also target the beverages, because that's also causing a problem with our health side. I'm going to quickly go through the withholding side, keeping the time problem in this, but this is just to reflect that these are basically non-income transaction-based withholdings which are lying in our system, creates the complexity. Just go through this. Maybe every business has to comply with half of these taxes because these are on withholding basis. These are touching almost all types of transactions which are related to the businesses of the common day persons and the corporate. So that is something which we have to simply take out of the system and maybe write a new income tax code. Again, we have talked about the capital gains reform, and we have also talked about actually synchronizing the real estate with the other sets of asset classes. But because the problem is that we see the real estate separately from the other sides of asset classes. If we see them together, then maybe it's easier for making the policy and to have a better compliance for both the individuals as well as for the businesses. So what we have expected through our estimation is that initially there is going to be fall in our capital gains tax, which is already very small. It's close to 10 billion rupees. But over time, this is going to be one of the buoyant resources which we can actually think through. Lastly, tax administration reforms are a must to carry on all these tax code related reforms, because if the administration does not improve, nothing can happen in terms of the policy or rates effectiveness. As we have talked about, filer non-filer distinction should be simply taken away, and there should be simply two categories, one who are required to file and the other ones which do not require to file. The idea of having a gas and electricity connection of commercial industrial nature, to have that particular code or identification which can be linked with the taxpayer, is another option. We already have this sense in terms of having a commercial bill or not, but we can identify unique code where we can improve the compliance to that. VAT mode is essential, and that can be easily done at least from the importer side, where we have all the information on the commercial importers and the wholesalers and the tier 1 retailers. And lastly, the whole audit function should be taken up in terms of the income tax, sales tax, because currently this is not helping the system. Digitization, we have plenty of work already going on in terms of the FBR taking through it. So the simplest principle should be that it should be to create that trust development, because unfortunately the state's revenue extraction capacity has fallen because neither the businesses nor the government actually believes whatever the FBR is going to come out as a policy, because they would think, they would fear that this is going to create additional costs. So digitization is a simple solution where the human interaction with the taxpayer is going to be taken away. So whatever happens is going to be recorded, it's going to be visible to everybody, so all kinds of distrust can be actually improved. And that would also help in terms of improving the overall economic sphere. So finally, to conclude, after all these reforms, if taken up in complete spirit, because the problem with most of the reforms had been that only few of the reforms are taken up and the other reforms are not taken in line of that, because all of these reforms are actually interconnected, we concluded that at the year 3, we would have close to 26% of additional resources as of the base of 21-22, and that is something which is again the lower end of the estimates, because we have not included the multiplier impact of reduction in the cost of businesses, the improvement in terms of how the tax can be collected, going through again the government side in terms of spending, and that would actually lead to more resource collection as well. And this is purely based on the FBR's collection side analysis. So I'll conclude here with a very simple request that if the FBR thinks that these reforms are not going to bring out certain revenue enhancements, then please read through our report. This is available with all the methodologies, and we are available for any sorts of discussion that how these reforms would be beneficial in terms of improving both the resource collection as well as improving the business environment for the growth of the economy. Thank you very much.
So now we are approaching the end of the afternoon. I just want to do a little recap before we move forward. We have in the audience now, I welcome Ali Pervez Malik. Thank you for joining us, State Minister for Finance and Tax and Revenue. We started off the day with a few comments from Ms. Birgit Lam, who was one of the partners in this event from the Frederick Naumann Foundation. And we had statement and a short proposal also from Engineer Arshad Dad from the Constructors Association of Pakistan. And then we had the presentation, Economic and Fiscal Transformation, Tax Administration Reform, the case of Georgia by Alexishvili, who's the former Finance Minister of Georgia. And then a rousing speech by Rizwan Rauji, will it be the last of Pakistan's IMF program? And finally, the proposal presented by Dr. Ali Salman and Dr. Mahmood Khalid. Now, last month we approached the Office of the State Minister for Finance and Revenue for collaboration on the Prosperity Forum. Ali Pervez Malik is one of the most open-minded and forward-looking cabinet members. He offers a mix of practicality and idealism with a vision for robust business environment while balancing the fiscal limitations of the federal government. I thank him for his time today, and I can think of no other person to deliver the closing remarks for today's session. I welcome on stage State Minister for Finance and Revenue, Ali Pervez Malik.
Bismillah ar-Rahman ar-Rahim. Good afternoon, ladies and gentlemen. First of all, let me thank Prime for holding this seminar on an extremely important subject, and let me also welcome the former Finance Minister, Mr. Alexei, to Pakistan. I'm sure I will get various opportunities to interact with you and to learn from your experience, because as a minister of Mr. Shehbaz Sharif's government, we are cognizant of the fact that if this is to be the last IMF program, certainly we will have to change and reform, and more of the same would not work. So Georgia has indeed covered a lot of ground on the reforms. I've also interacted with your former Prime Minister, Nikolai, I think, if I'm remembering his name correctly. He's been to Pakistan in the last couple of months, and he's also met the Honorable Prime Minister of Pakistan, and we were exploring various areas of collaboration, because you have also been successful in overcoming another Achilles heels for our economy, which is the power sector. So we were working with the former Prime Minister of Georgia on that front, because I believe he's also been a power minister and all. So I once again welcome you on behalf of Ali and Prime Think Tank, and I look forward to working with you and building on your experiences for the benefit of Pakistan. The first thing that I would like to state is that, as I mentioned earlier, that the government is fully cognizant of the challenges that the country is faced with. It is not too far back in the past that we had our own sets of challenges and we were struggling with the balance of payment crises. It was a time when our exchange, our foreign exchange reserves had depleted to a level of about 2 weeks of cover, and we had, our friend Mr. Mukarram is here. He's a known authority on custom matters and everything, and Dr. Manzoor Saab is also here, who follows international trade clearly. He will bail me out in the sense that when the foreign exchange reserves had depleted to the level that I'm talking about, and this is not many, many years back, this is like a couple of years back. So we had more than tens of thousands of containers standing on our shores, and the country was struggling to retire those LCs in time, and there were numerous supply outages leading to skyrocketing inflation and disruptions in our trade, and this is not too far back. So the government fully realizes how this situation needs to be handled, and I think in the last year and a half, under the leadership of Prime Minister Shehbaz Sharif and the present Finance Minister, the country has taken quite a lot of difficult decisions to bring in some sort of stability in our macroeconomic landscape. And as I stand today, I am pleased to say that although this stability has been achieved at a tremendous cost, because the common man has suffered, because we had a runaway situation with the inflation last year. In April, May, the CPI was around 40%. So you can imagine the kind of toll that the inflation caused on the purchasing power of the common man. The businesses were struggling with the supply outages, the plant utilization drops. There were a lot of redundancies. So, all this achievement of some sort of macroeconomic stability has come at a tremendous cost. So I realize that it is incumbent upon the government to not let this crisis, like previous crises, go to waste if we want to make IMF the last program. So that realization at the highest level is definitely there, and we look forward to working not only with our friendly nations, but also esteemed think tanks and people in the academia, whether it be PIDE or LUMS and other esteemed organizations and universities in Pakistan. So inshallah, we plan to build on this stability. And the first thing I think that was essential was that we try to bring some sort of permanence to this macroeconomic stability, because this has been a chink in our armor for the last 70 years. So how did we do that? We engaged with the lender of last resort, and I don't say that as a medal of honor, but I say that as a matter of satisfaction, because that clean bill of health that was needed to finance our external account vulnerabilities was extremely important, and that is what has brought confidence into the economy. So when I stand here today, the reserves are at an all-time, not at an all-time high, but at a recent high of about $16 billion. Inflation, which last year was 40%, is now down to single digit. It's hovering around 7%. Pakistan bonds, which reflects the confidence that the lenders have on the path that the government is walking, has rallied from 40 cents to the dollar to about 95 cents, which is a huge improvement. The Karachi Stock Exchange is at an all-time high. Even today, I think it made a new record, and it's now touching 94,000 level. So what the point that I'm trying to make is that the stability which has come at a great cost is yielding early signs of recovery, but it is incumbent upon the intelligentsia of the country, on the government of the country, that we continue to work together and build on this stability and move towards a more inclusive, so that the dividends of the growth can be shared with the entire country, as opposed to just focusing on segments of the economy. We move towards a more inclusive, resilient, because today climate proofing is a huge subject, because it has implications not only for our urban cities. I don't know whether you would be going to Lahore today or not, but Lahore, which is the second largest city of Pakistan and a city from which I belong, is engulfed with thick smog, which is taking a huge toll on the productivity of the employees and on the upbringing and the health of the children. So we need to ensure that this paradigm shift that we need to make in order to build on this stability is focused more towards inclusivity, resilience, and sustainability. Of the growth. So this is one thing that I would continue to seek your guidance on, because previously we've had sprouts of reform which we've not been sustained as a country, because we've been probably chasing a mirage or looking for a messiah and not been persevering on a particular path of reform. So what we need to do this time differently is sustain this reform path, rather than taking one step forward and two steps back, because reform is never easy. Reform, as you would bail me out, means immediate term pain for medium-term dividends. So if we want to make this the last IMF program, my only hope is that as a nation we are able to enrich the conversation that we are having within Pakistan on these important fundamental existential issues through initiatives like these, and build and move towards a more sustainable growth trajectory. So I look forward to that. On the subject at hand, so I agree, tax policy has a very instrumental role in orientating the economy in a particular direction. So the entire tax policy that we are working on will somehow try to reorientate the economy based on these three guiding principles that I've shared with you. And all these things about being on the wrong side of the Laffer curve, I accept that, but the thing is, unfortunately, there are practical compulsions also, because as a country we have tried to explain to the world that we will lower the rates and try to increase the collections, but we have failed on that front, unfortunately. And you can divert and root the entire blame towards me, and I'm willing to take that. But as a country, we need to also understand that there is an international environment in which we are operating. So the realization has to be there, and there has to be a practical transition plan, because we have claimed this transition numerous times before, yet ended up with the 24th or the 25th IMF program. So we have to first show them that we are willing to walk this particular path, and I'm sure the world will also acknowledge the methodology behind the Laffer curve. So how we are going to do that? There is a huge digitalization initiative that is going on in FBR, and I am happy to share with you. Ali is also part of a few initiatives that we are trying to roll out there. It's not, and coming on, better targeting of potential taxpayers and increasing the reliance on direct taxes. That will follow once you have better visibility on the consumption patterns of individuals, because that is how you can use technology to take you and pinpoint you to the right people who should be in the tax net but are not in the tax net, and they should not have a license to continue to operate in the economy under the non-filer category which you were mentioning, and not be prosecuted against. So the point that I would like to make on that is that the whole concept of rolling out the non-filer category was probably missed in the last couple of years. The whole point of rolling out that non-filer category was to use that as a data source rather than a revenue spinner. So what has happened, and unfortunately this is what happens when practical compulsions push you in a particular direction. So you've started using that as a revenue source. So what is different this time, and what are we trying to do with the digitalization initiatives? We are trying to use that data point, that if a non-filer is doing all these transactions, if he's buying cars, if he's buying properties, if he's traveling abroad, if he's using his credit cards, if he's drawing profit on huge bank deposits that he's made, we will use this as a data point to, yes, collect a higher amount of tax, but at the same time, this data will be run through an analytics algorithm. It will be subject to a desk audit, and then this information will be sent to field offices, and those field offices will have to show progress on each and every case, which will be visible in the office of the chairman FBR through a digital dashboard. So, a lot of effort has gone towards obtaining and acquiring this data. Algorithms have been run. The first set of 200,000 individuals, extremely high net worth individuals. These are people owning 3 vehicles. These are people who are getting annual profit on their bank deposits of over ₹1 million. These are people who are spending credit card over 200,000 rupees a month. These are people who are sending their children to private schools. So the data has been gathered. We have done desk audit on the topmost 5,000 individuals, and I'm pleased to share here, you will see notices going out in the next couple of weeks on this front, but to give you some insight into the kind of tax potential that this will provide us is that these 5,000 individuals, when they were made subject to desk audit, the income associated with these 5,000 individuals was about 27 billion rupees. And the direct tax yield from these 5,000 individuals was estimated at something like 6-7 billion rupees. So we can say with a high level of confidence that if the 5,000 individuals that we subjected to for desk audit have thrown out this number, as we continue to reduce the thresholds for the transactions, this number will continue to increase and will provide us huge opportunity to go and prosecute them. So the purpose of the non-filer category, which was probably lost somewhere in the transition, would be salvaged, and we will now try to expand and broaden the tax net, inshallah. And once we are able to do that, it is only then that we can go to the world and say, look, this is what we are doing, trust us, we know what is best for our economy, and then they will be more accommodating. So this is the point that I wanted to make on the non-filer slide that you showed us, and I hope this will provide the audience with some sort of insight into the kind of activities that we are working on. The other huge initiative that we are working on is with Ali here, which is in the tobacco sector. Because of heavy taxation, again being on the wrong side of the Laffer curve, he knows this, balki he's the secretary of the committee also. He would confirm this to you, that more than half the cigarettes being sold in this country are illicit. So again, that has a revenue potential. If you're able to get coverage over this grey segment. Not only will it have positive externalities because of better health outcomes, but the revenue potential is how much, sir? 200, 250 billion? That's the total size of the market. So you can't, so half of that, if 50% is the market, so that's the revenue potential that you're working on. So there are various interventions, and we are collaborating with the provincial governments, because at the end of the day, you can make and smuggle cigarettes discreetly, but eventually they have to be sold off the shelves. So you have visibility on that. The FBR has been very progressive in terms of installing a track and trace system on which you have an identifiable stamp on each and every packet. So for a law enforcing officer, whether it be of FBR or whether it be of a provincial authority, can go to the store and see whether the stamp is there. If the stamp isn't there, he can easily confiscate and fine it. But what is the problem? The problem is that Mr. Mukarram Jha's organization has only a few hundred people responsible for enforcement for a country of about 250 million people. So how do you work on a solution? You try to collaborate and work out a win-win solution with the help of the provincial governments. So that is what we are working on. So the government fully realizes that, and inshallah we will move towards balancing the imbalance incidence of taxation on certain segments. I don't want to go beyond that because I've already taken up a lot of time, but that will reflect to you what the government's priorities are, and we will continue to work on that. But equally important, although it might not be the topic of discussion today, is expenditure reform. So the objective, the only issue that I have with the banner is that tax, agreed, it's very important, and Pakistan is at the lower rung of the countries in terms of collections. But it is also one of the, it is a country with one of the highest expenditures to GDP number. So there's definitely more room for expenditure reform. And how you bring expenditure curtailment and efficiency. So I think the objective has to be fiscal consolidation as opposed to tax growth or expenditure reduction. So the culmination of that effort would be the fiscal consolidation part, and ensuring that one of the reasons for that balance of payment crisis, which is a runaway fiscal deficit, we are in a better position to not only manage it, but also handle and finance it subsequently. So we are aware of that. So I think this should be enough food for thought on this subject. But at the same time, I think another important thing that we need to work on is that as we reorientate the economy towards a more private sector-led economy, one thing that we as a nation should also work towards is improving the regulatory capacity of our regulators, because as we reorientate and allow private sector a more enabling environment and a bigger share of the GDP, we must also guard against collusive behavior and market failure. So a lot of effort is going towards building the capacity in the regulators, whether it be the Competition Commission of Pakistan, whether it be the State Bank, whether it be NEPRA. Because had NEPRA been more forceful and forthcoming, maybe we would not have been challenged with the power sector situation, because it would have balanced the different interests of the stakeholders in a far more efficient manner. The same applies for OGRA. So we're all working on all these touch points of the economy, and in the end, while I thank Prime and especially Ali for giving me an opportunity to come and share with you the work that we have been doing in the last couple of months, I assure you the government will continue to move towards a path of more inclusive, resilient and durable and sustainable growth paradigm, and this time what should be different for Pakistan as a nation is that we are able to sustain this reform with a whole of the nation approach. So with that prayer, I look forward to continuing to work with all of you and seek your input and guidance on this transformational path. Thank you again, very kind of you. You're not interrupting me, I finished my thoughts.
Why don't you just immediately eliminate the super tax which your party had put in place during the emergency of the balance of payments that we had 3 years ago? It's so easy to do it. Just get rid of the 10% super tax on income and the corporates and just get going. But you have to get the... Just get rid of the super tax, and please, I suggest that's a good start at the current situation where the tax is at which level. I mean, you're not going to be going down the Laffer curve at all. Just get rid of it. That's my suggestion.
Rizwan Sahab, I don't know whether I'm supposed to answer or not, but I can surely attempt to answer what you've asked. So when I say that we have to reorientate the economy towards a larger private sector presence. So I accept the point that you cannot have high taxation which transfers resources from the private sector to the public sector. So I accept that, and I understand that the banks are challenged with over 55% tax to effective tax rate, and that is hammering the capital formation in the private sector. So I own that. But I think I touched on this issue while I was speaking of reform and of being on the wrong side of the Laffer curve. Because today, and I'm going to share public numbers, so it's not as if I am going to make a revelation here in front of the cameras. We have to move and perform against certain targets if we want to remain in an IMF program. And I'm not disputing whether that ask is fair or unfair, but there is a particular path against which we have to deliver, and we are already struggling. And I've already acknowledged that we are on the wrong side of the Laffer curve. But if I take away this profitability tax, which is a tax on the profitability of companies which are highly profitable, I accept that this is an unreasonably high rate. So can you please suggest where I should park this collection and whose shoulders should I park this burden on? Because I don't want to go down the path of imposing more indirect taxation. So unfortunately, till we get the undertaxed and the untaxed through digitalization and what Professor Saab was mentioning, we can continue to desire and ask for the moon and the stars. I would be in a practical straitjacket, so I hope that addresses it. Thank you.
I think it's very important to thank Minister Ali Pervez Malik Saab for an overview of the government priorities. Just want to make a short comment. I think last May what you said about the public expenditure was very well received. And this is what actually Mahmood Khalid and me have been discussing, that we should divert the next attention actually to the fiscal consolidation and a thorough analysis of public expenditure. So in the same spirit and mechanism in which we formed this Tax Reforms Commission and prepared a very thorough report, we will actually do the same for the public expenditure. And inshallah, we'll do the next conference on this topic along with PIDE and with your support. So thank you again. Yeah.
So we are now approaching the close of the afternoon, but before we break for lunch, I would like to acknowledge, of course, the efforts of the Prime team in organizing this event. Very well done, guys. And we have an associated topic that we published a report on, an empirical critique of the national tariff policy. It was done by Dr. Nadia Tahir. So we want to acknowledge that during this event, and before we do that, I would like to acknowledge, of course, the commission itself, the Tax Reform Commission. If we could get a picture with the members, all the members of the Tax Reform Commission, and with the Minister for a brief period. Dr. Nadia Tahir, would you be on standby? Yes. Dr. Shajad. Dr. Manzoor. Say so.
डॉक्टर कराम तो यहाँ नहीं है और डॉक्टर मंजूर हैं खलील अहमद
Dr. Khalil.
वो एक एक रिपोर्ट की कॉपी दे देना सबकी तस्वीर हो जाएगी टीम का मेंबर है
Samara, some of these.
We need 5 copies quickly please जल्दी से ले यार
Almost a year of work has gone into this commission report. Now, Dr. Nadia Tahir, if we could also have you and your report for a photograph with the Minister. Please stay here, Minister Saab.
स्पीकर्स की ग्रुप फोटो ले लेते हैं सबके साथ
शील्ड्स भी हैं जी शील्ड्स भी हैं
हाँ तो वो कर लें
शील्ड्स पहले कर लूँ या फोटोग्राफ कर लूँ शील्ड्स पहले कर लेता हूँ फिर ज़्यादा लोग उठेंगे
शीट्स कर लें
ठीक है Now, just to acknowledge the speakers who have spoken at this session, we would like to distribute, we would like the State Minister for Revenue, Ali Pervez Malik, to distribute shields to the speakers and experts. Sumera, if you could please arrange for the shields. Rizwan Raoji, sir.
You're giving me another one?
Yes.
This is the thought.
The more you have, Ji.
Yeah, it's in my office behind my desk. But you know, I always say, names are for tombstones.
No, this.
I know you're in a tight situation with the IMF this week, but you took some time and I am grateful that you made it. Very, very nice.
Dr. Mahmood Khalid also. और मिनिस्टर की आप देंगे ना
मैं उनको देता हूँ
हाँ
अनाउंस कर दें
In order to be the vice chairman, you have to be named the name. That's what he said.
And I would like to acknowledge, of course, the Minister for giving his valuable time and precious insight on this issue. And if we could have all the speakers in the session to join us on stage for one group photo. Only speakers. Rizwan Rawji Saab already on stage. Mahmood Khalid Saab. Please, Abhi. Dr. Ali Salman. I think Chaliji, I think it's a good point to finish up with the official proceedings. Please join us at the back of the hall for lunch and networking. Thank you very much.